Good morning, Bitcoin. My name is Thomas Hunt, and this is Proof of Work. Proof of Work is a show about the people behind Bitcoin and what they do and how they got here. Our guest today is Tyler Jenks. Welcome to the show, Tyler.
Thank you, Tom. Great to be with you. I've been watching you for a long time.
Thank you so much. Very cool to have you on the show today. We're going to start out with our favorite and most familiar question. What was your first computer?
My first computer was a Bomar calculator when I was getting my master's degree in business back in the early 1970s.
So
it cost like $200 and it had 9 keys on it.
Does it have a paper tape?
No, nothing that elaborate.
And it wasn't solar powered. Was it batteries? Or?
Yeah, it was batteries that would run out all the time, and I couldn't figure it out then, and I can't figure out computers today. I don't have a single technical gene in my body. It's the weirdest thing. My son runs an IT company, and my daughter works for him.
Yeah.
The
whole family's technical.
Right. Yeah.
So how did it happen that you got into Bitcoin if you weren't that into computers and technology and the internet?
That's actually a great question, and I've never thought about it that much before, because my background was macroeconomics. Had a degree in international relations, undergraduate, and then I did get a master's in business, which I didn't want to do because I hate business. I hate anything corporate. It was boring. I hadn't taken a single accounting course, but I was in the Coast Guard and over in Hawaii, and they would only allow me to take one course, and they would pay for it, and I didn't have any money. So it could have been archaeology, or it didn't matter to me, but it turned out to be an MBA. So I spent 3 years going to school and learning little things here and there, and some of it really resonated with me because in Hawaii there's a school called the East-West Center, which is mainly trade between Asia and the United States. Great professors, really know what they're doing, and it hit a note with me. Wow, there's something very big here. And then I took some finance courses. And one of the professors was the manager of an old brokerage firm called Dean Witter Reynolds, which has been gobbled up 3 times since then.
Yeah, I think it's a Morgan Stanley Dean Witter.
Yeah, that's exactly right.
Been eaten up,
and American Express got involved. So he said, "What are you going to do when you get out of the Coast Guard?" And I said, "I have no idea." And he said, "Well, think about coming to work for me in Honolulu as a stockbroker."
Hawaii, that sounds pretty good. That's a pretty good place to go.
Not too bad at all. So I did that, fell in love with it, and I've been doing it every day since. I started out as a broker, and then I set up my own firm, and then we became money managers, and then I set up another firm to manage or to research this new asset class called a mutual fund. Now that doesn't sound like it's new because it started in 1923, but starting in the 1970s and 80s, it became the fastest growing financial asset in the world. Today we have $23 trillion in the United States in mutual funds, which is 3 times more than all the gold in the world. But nobody was researching it. Everybody just thought that all you had to do to figure out if you wanted to buy a particular mutual fund is look at its past track record. If it had a good 5-year track record, you assumed it's going to have another good 5 years in the past.
Sure.
And that was nonsense to me, and is nonsense today. So I actually built a company just to answer that question. How does someone in Des Moines, Iowa, make the calculation that I want this fund instead of that fund? There's 22,000 funds today.
Sure.
But I saw the curve. Okay, so fast forward to get to your question. Same thing for Bitcoin. Even though I don't have a technical gene in my body. I am in love with everything about exponential growth because of technology. So I've read everything I could get my hands on.
So like all the startup books, Crossing the Chasm, 0 to 1, this idea that with an internet startup, if I was making widgets, I actually make the widgets, I have to sell them to you. But with this internet startup, we can make software, we can make 100,000, 1 million copies of the software, we can ship it to all the phones tomorrow.
Exactly.
Yeah.
And that just excited me, because the first time in human civilization, you could see a new world opening up. And this, believe me, I'm an old timer, so we're talking about the late 80s, early 90s. We're talking about the original Apple, the original iMac, the original, long before iPhones.
Sure.
And watching people like Steve Jobs, and all of that was just very exciting to me. Then I started reading Ray Kurzweil, and the 3 books that he had, I've read 10 times each. And the first one was called The Age of the Intelligent Machine. And the second one was called The Age of the Spiritual Machine. And all of a sudden, I really sat up, because I'm very excited about the confluence between the physical world and the metaphysical world.
Well, and remember, Timothy Leary was very into the computer when they showed it to him.
Absolutely.
It was towards the end of his life, but that he could really see it. And then they had that clip that's going around lately of David Bowie, where David Bowie says, the internet is a life form. It's an alien life form that's come down to us, and it's changed everything. And he was talking about like 95.
Yeah, absolutely.
Completely ahead of his time and right on the right track, I think.
Right, and the thing that then really knocked me out was this book called, by Ray Kurzweil, who's the head of research for Google now, called The Singularity is Near. And he's basically saying that there's an integration between the human being and computers. And it won't be 2 things, it will be 1 thing. And that will be this integrated being. And when asked the question, do you believe in God? His answer is, not yet. Because he believes at that point where we have infinite capacity of intelligence and knowledge and memory, which is potentially true but not practically true, that we then will each be as gods. You can take that or leave it, but it was fascinating to me. Now all of a sudden 2010 comes along. Now, my background after doing all that silly research with mutual fund was I became an investment manager for large institutional pension funds. And I did that for 25 years, using asset classes like what we're talking about. Cryptocurrency and Bitcoin is an asset class. It's a new one. Fabulous book by Stephenson, or Stevenson, Neil Stephenson, called Cryptonomicon.
Sure. Yeah, I read all his early books.
That I just, oh my gosh, how does anybody have this kind of knowledge? But in it, I got this sense when we went through 2006, 2007, 2008. Now this is prior to the white paper. 2006, 7, 8. I've got some technical tools that I've developed that I'm talking at this conference about, a thing called Hyperwave and Consensio, a number of other things that they're proprietary to me, and selfishly I've used them for myself and my clients for 40 years until Bitcoin came along. Because now all of a sudden I read the white paper, I take all of that thing that I just talked about in terms of my mental development about we're on the cusp of something here. We've just gone through the worst downturn in the world that almost within hours brought the world macroeconomic financial condition to its knees. It was an absolute miracle, 1 in 100 chance that we got out of that. And even though I am not a big central banker or centralization of finance, I tweeted not too long ago, I am still in awe of what a small group of people were able to do to save the world financial system. Now, here's the problem, as you know, and I know, and Satoshi, whoever Satoshi was, knew. By solving that problem, they made it much, 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 much worse. So that today the problem is 10 times larger than it was back then, and they've got half the ammunition, and they cannot solve it. Impossible using traditional methods. And we don't need to go into that.
Kick the can down the road works very well. You just keep kicking the can down the road.
Until you come to the Grand Canyon.
Yeah, that's a problem.
And we are at the Grand Canyon. The can has gone over the side. Now what?
That's
so
bad.
that's the long answer to how I got interested in Bitcoin. So I just started asking a million questions in 2010, 2011.
Well, and I think that's the thing to do. People at home often don't know where to start, and they don't know anything. You have to ask questions. You have to be wrong too. I often will say something on the internet, I'll like try to explain it simply, but I'll be wrong. And then later on they'll tell me and I'll find out. And I don't get upset that I'm wrong, because the internet does know more than me. And
absolutely.
Like Peter Todd or any of these people, they're going to correct you.
Yep.
But it's okay for that to happen. You have to ask the questions and to do that, to learn more. So.
Well, and there were back then very few resources to learn anything. Then people like you came along and started talking about it and asking questions and bringing people on the show. And so what you were really getting at is, when did I really start screwing around with this thing? And it was really in 2011. I'm a big gamer.
Yeah. This is a surprise. So you're not technical, but you're a gamer.
I'm a big gamer.
What game? Your PlayStation, computer games?
You name it, I've done it.
All right.
I mean, I've become obsessed with World of Warcraft, 8 hours a day. You know,
it's becoming a theme today. We got a lot of World of Warcraft players here.
As an old guy, you know.
Yeah.
And my son, we were gaming when he was 3 years old, and he's a huge gamer. Went into IT, set up his own company. So. The virtual world, to me, isn't a virtual world. It's a real world, and at some point the two are going to mesh, and that's what the Singularity is all about.
Sure.
But so I had a pretty powerful gaming computer that we had put together. We meaning my son.
Sure.
And I wrote the checks, and he built it. And then I started mining Bitcoin. 2011, got caught in Mt. Gox. Didn't understand anything I was doing or what the technicals were, and what happened to this thing called Mt. Gox, and it's not regulated, and I became.
Well, you're just from the finance world. You're used to everything being FDIC backed and being legitimate and professionals.
And the trust issue, absolutely. And you, when somebody is a counterparty to something you're doing, you can completely trust them, because if you don't, burning Madoff, if you don't, there are consequences for everybody.
Yep.
And so you learn to learn who you want to work with. And it's a difficult process, but it's possible. I found in the crypto space that was impossible. And because I'm technically so challenged, I didn't have the capacity to understand it, so I said, no thanks. So I shut down the mining
that's
operation.
what Warren Buffett says. He says, don't invest in anything that you don't understand.
Exactly.
And you're taking his advice there, yeah.
Exactly. Until April 2017. So big gap where I stopped watching anything about Bitcoin. I read the public price, because that's all they talk about.
Sure, and see if it's dead yet. Is it dead? It's not dead. Or
all that kind of stuff. But I got a call from my son in April of last year, and he said, Dad, take a look at Bitcoin one more time. I think it's in a hyperwave.
Yeah.
So the thing that brought me back is this thing called a hyperwave is something that I discovered 40 years ago. And it's a very powerful technical tool that you can almost never use because they're so rare. And when you find a hyperwave, what it means is there is a major shift going on in macroeconomics. And just very quickly, the four big ones, the biggest one of all time was in the credit market. It started in 1942 and just ended 3 years ago. That was one hyperwave. That took interest rates up for 40 years, down for 40 years, and did exactly what my theory says it should do. And recognized that back in 1985, wrote a big paper saying this is going to be the biggest bond bull market of all times because interest rates had peaked, and as interest rates come down, that means bond prices go up. So great prediction. A lot of the media wrote stuff on it. But I had done the same thing back in the 1970s with gold. Gold went into a hyperwave from $35 up to $881 during the 70s. We had this massive inflation. We had interest rates at 15.5% on U.S. Treasuries. You could take your money into a bank in early 1979, put it into an account with a money market fund and get paid 21%. And most of the crypto world doesn't, they've read about that in their parents might have experienced it. But I lived through all of that stuff because I was in that business. So gold and silver and sugar, but that was because of this inflationary spike, a macroeconomic shift, because Richard Nixon closed the gold window in 1971 that killed Bretton Woods. So Bretton Woods, 1944, the beginning of the credit bubble, 1942, peaked in 1979. Paul Volcker stepped in, killed inflation, put us into a recession, and interest rates have been dropping ever since. That was a hyperwave. Back in the 1920s, the roaring 20s between World War I and World War II, macroeconomic shift, Weimar Republic, that people are talking about again today. You need to research that and understand that, because people are afraid we're about to do that. I am not. This is a deflationary time, not an inflationary time.
Just to explain for everyone at home, Germany was under reparations after World War I, and to repay them as well as to run their economy, they printed endless amounts of Deutschmarks. The picture is always someone with a wheelbarrow full, or you're wallpapering your wall, or you're using them as firewood, something like that. And we've seen in Venezuela a similar thing. Zimbabwe, they keep making the $1 million, $1 billion notes. They keep making more and more notes.
A loaf of bread.
And
that's the consequence of macroeconomic shifts. They all get out of hand for some people. The one we're talking about today is getting out of hand for all people. This is the first time globally that we're faced with this problem. Okay, so my son calls me up and he says, "Dad, I think this is a hyperwave." I immediately say, uh-oh. I know we've just gone through this crisis, but for a hyperwave to be developing maybe in this thing called Bitcoin is saying something about a shift in world currency. I better get back onto this bandwagon. And I did. And I built my own pricing model because I don't trust any of the exchanges. Don't today. I will admit on camera, I've never bought a Bitcoin. I am the ultimate Bitcoin maximalist. But I like what Ugly Old Goat has done by changing that term. Instead of a Bitcoin maximalist, I'm a Bitcoin standard bearer. The Bitcoin standard by Saifedean Ammous is an important work because it sums up everything that you and I are talking about right now. So we've got this book. We're changing from maximalist to Bitcoin standard bearer because only Bitcoin can take care of this problem. All the other things can help the population understand a little bit more about this very difficult concept where you don't really hold anything, but it's real. And it's more real than the things you hold. So I studied it. I concluded my son was right. We were beginning a hyperwave. Now, you know the history better than I do, but the two previous little bounces, and I call them little bounces, there were hundreds of thousands of percent.
Life-changing.
Exactly. Were not hyperwaves. They were bubbles, and they burst and fell again. This third one we've just gone through was a hyperwave, which goes, it moves in 7 phases. It's in the 7th and last phase. It's going finally to a terminal point that I believe will be down below $1,000. None of that really matters. What does matter is the next move up.
Now, I want to ask on this because everyone has this, it goes down and it comes right back up there. Now, I like that. I like Bitcoin. I hope that happens. But I can never predict any of these things. I never time the market right. If it goes down, I get that fear that it goes down forever. And if it breaks, like you're saying, 1,000, people lose faith. They lose all their money. They lose their minds. I mean, how are we going to bounce right back?
You're exactly right. But it needs to happen. We need to clean out the system. The reasons something goes into a hyperwave and goes extraordinarily high relative to expectations is because everybody's on that side of the boat. And it takes it too far, too high. We shouldn't have gone above 6,000, 7,000 maybe, 7,500. That's where it should have ended. And if so, we wouldn't be going through this downside. We didn't.
Yeah.
All the FOMO, everything that took it up to 20,000 was premature. That's what a hyperwave is. And unfortunately, there's two sides to a hyperwave, the good side and then the bad side. So in December, we bought a lot of GBTC. GBTC is the Bitcoin Investment Trust, and it's got all kinds of problems, but it's far superior in terms of being able, as a money manager, to buy and sell it with confidence in a very simple way by pressing a couple of buttons.
Sure.
Not memorizing all kinds of things and trying to figure out where did I leave it.
Well, and what company you're going to trust. You can go with, Silbert
or what
Group
exchange
and that kind
you're
of
going to
thing.
put it on. So we bought a lot of Bitcoin. We, meaning my clients, my family, my friends, in August of 2017, and we sold all of it in December and have been out ever since. But here's the important point. In December, at 20,000, 19,661, depending on what exchange you're talking about. In December, at that point, Hyperwave says you're going to go back to the beginning. The beginning is 1,000. 1,000 I didn't pick out as a number.
Yeah.
It is the base that we started from, because in the previous bounces we got up to the 1,000 mark, depending on exchange, 1,300 at one point. But that's called a phase one. And the final phase goes back below that. That's why 1,000. Okay, but your point is, you and others, almost everyone I talk to, are scared that if we get there, nobody is going to want it.
Yeah.
Perfect. Because that means every incremental person that becomes interested in it, the price is going to go up. And always does. I've cataloged over 400 hyperwaves over the last 300 years, and all of them still exist after it goes back to the bottom. Gold, silver, the stock market, the Japanese stock market.
But these are like established commodities. What if like MySpace never came back? MySpace had 1 million users, and now
it wasn't a hyperwave.
Less,
that was a bubble.
Yeah.
All hyperwaves are bubbles, but not all bubbles are hyperwaves.
Okay.
A hyperwave is a very specific thing that acts in a very specific way. And I spent 8 hours teaching it yesterday for the first time. I've never made it public until yesterday at this conference. And we were supposed to have 20 people, and we sold that out. Then we were supposed to have 30. We sold that out. We were supposed to have 40, and then we finally filled up the room.
Nice.
It only had a capacity of 38. We had 55 people. Why? Because it's talking specifically about Bitcoin. Now, I wrote an article last week in Medium called The Long and Winding Road to Bitcoin $10 million. That's where it's going to go. But it has to first clean itself out. And we don't need to go into details because nobody knows what that means. Hyperwave tells you where it's got to get to do that. Now, your point is it going to V-bottom and go straight back up? No.
No.
We don't want it to do that. What we want it to do is become an S-curve. We want it to go to the old highs of 20,000, and we can do that.
Yeah.
We don't need institutions. We don't need hedge funds. We don't need banks. We can do it. We meaning individuals that get the picture. And once those people see it start climbing back up, it's going to have trouble at 6,000 because that was such a difficult support level, and now we're under it. It will have trouble at 7,500 and 8,500 because that was a problem in the past. Those were old peaks. 10,100 to 11,100 I call the valley of death. Very tough to get through, but we're going to get through it. Then only 2 more points. 13,500, 17,500, the old peak highs, and then we're at 20,000. Guess what's going to happen at 20,000? We're going to go from 20,000 to 100,000 like that with no outside help. Now we run into problems, big problems. Why? Because at $100,000, Bitcoin is 1/4 approximately of the value of all the gold in the world. And now the war begins. The war between acceptance of a gold standard to solve the problem, meaning the debt credit problem,
Right.
or Bitcoin. Bitcoin is not in the game now. It is theoretically, we all know it can be, we know
Sure.
it's superior in all these different ways, but we are so tiny, and the world knows gold. The banks know gold standards. The central banks have used gold standards.
But didn't they throw those off in the 70s? That like they got rid of the gold standard because they need to pump the GDPs more. They need this unlimited growth to keep the thing going. And
Absolutely.
They couldn't
and
make that on
worked
gold.
great from 1971 until 6 minutes ago.
Yeah, about now.
But we just kicked the can the last time, and it's falling a mile into the. It's over. Why? Now let's just talk real economics. For the last 20 years, the growth of wealth in the world, total wealth, what you've got in your wallet, your bank account, your Bitcoin wallet, real estate, if you take all the wealth of the world, all the real estate, all the pension funds, all the sovereign wealth funds, all the money in currencies around the world, it has been growing at 136% over the last 20 years. That's pretty good. That means everybody's a little bit wealthier. But debt has grown 396% over the last 20 years and is accelerating. So we've crossed the point at which if everybody donates every penny they have, all the pension funds, all the gold in the world, all the real estate in the world, all the corporations, the $23 trillion in mutual funds, if everybody tomorrow said, okay, this is a bad problem, take all of my money, it will not solve the problem. So there's only 5 solutions to that problem, theoretically, academically, and we don't need to go into it, but the best 2 are a gold standard or the Bitcoin standard.
But both of these would lose control for the central banks right now.
Absolutely.
Without the gold, they can print as much as they want. I mean,
they've lost control already. They just won't admit it publicly, but they know it.
That's
Everything
fair.
you and I are saying, they all know.
Yeah.
They need a solution, and there's 5. One is a Bitcoin standard, one is a gold standard, one is default on the debt, which is the most probable of the 5 solutions.
That's what China's worried about, right?
Absolutely.
Yeah,
we can grow out of the problem. That's what Donald Trump is trying to do, and nobody understands it. We need to keep GDP on a worldwide basis at 3% or more. There's only the U.S. that's keeping it around 3%. Everybody else as well. China says they are. They're not. They're down around 2%. But at 3% and low interest rates, meaning low payment on the debt, we can keep the party going. But that last little spark, that's the least likely of all the 5.
Sure.
But it is there, and it's theoretical, and it's academic, and we can hope. And then finally, and you just brought it up, I've added a 5th, which is a basket of currencies, including gold, including Bitcoin, including the yuan and the US dollar in a certain proportion that people could agree on. And that's what China's proposing. They've been trying to get off the dollar standard by doing all the stuff they're doing. To me, that is a possibility, and it will not work. There's only 2 in that thing that will work, a gold standard, and that will only work for a limited period of time, like the last one, and the one before it, and the one before it. But it will buy us 10, 20, 30, 40 years. The Bitcoin standard, if we can get Bitcoin above 400,000, which is the value of all the gold in the world, now the central banks, looking through those 5 possibilities, will say, well, maybe Bitcoin, maybe gold. Now, who's going to buy Bitcoin to take it up to $1 million? That's where the cowboys come in. All the pension funds, all the mutual funds, all the sovereign wealth funds, not the banks yet.
Yeah.
They're the last ones.
Yeah.
You know, they're holding on for dear life. But then, once we get up to $1 million Bitcoin, we're talking about significant $21 trillion, basically, at 21 million Bitcoins. And then the banks will start buying. And who are they going to buy? The central banks are going to buy. The central banks are going to end up with all the Bitcoin. That's how they're going to keep their control. But they're going to have to get it from somewhere. Who are they going to? They're going to get it from you.
Yeah.
And you're going to say, no, they're not. If you're going to say they're going to get it from me, I'm going to say, yes, they are. And I'll have to make the decision. Do I want to sell it to them at $1 million, $2 million, $5 million? But there's a transfer of those 21 million. That's what's brilliant about Bitcoin. It's a limited number. Nothing can be printed. So they're going to want it. And that's what's going to take us up to 10 million. And at 10 million, what we have is we've got $210 trillion worth of Bitcoin, which then is enough to be a reserve currency for all the debt in the world up to 500 trillion. We're only at 300 trillion right now. It solves the problem. It will cause tremendous upheaval. But that's not our problem.
No.
The central banks got us here. Any one of the 5 solutions is going to be horrible, except the growth solution, which is not going to happen.
Yeah, I know.
So
we could have a war with space aliens, something like that. That's a very motivating. You need a lot of fuel to get up there. It's a lot. Yeah,
exactly. So you started with a very simple question: how and why did I get interested in Bitcoin? And I know I rambled a lot, but I like to tie together, because I'm seeing more and more people come to the same basic conclusions from different ways. Either I want Bitcoin because there's all this bad stuff, but I can't really define the bad stuff because I'm not in finance and I'm not in economics. There's these bad guys and these good guys. But to me, this is the most exciting asset class of all times. It's grown faster than any other asset class in the short period of time. Don't worry about the fact that it's gone into this hyperwave and now it's got to get to a bottom. Here's what you have to worry about. We don't want another hyperwave that takes us up to 100,000, because if it's in the form of a hyperwave, it's going to go all the way back down. That means that the gold standard beat it.
Yeah.
And that was accepted, and as Saifedean says in his book, the way to kill Bitcoin if the world doesn't want it is simply go to a gold standard.
Yeah.
Because it's easy to adopt. That will not kill Bitcoin. It'll take it back down to 5,000 or 10,000, and we might be there a generation. As long as I can sell it to you and you can sell it to me, it will not die. And then if we've got 1 million of those 30 years later, when the gold standard dies, it'll take its place. But what I want to see happen is I want to see it get up, beat gold, and then plateau at around 10 million, be adopted, and it's here forever.
Well, it sounds excellent, and it's great to get your ideas from the finance side, because I know when I look at it from the technical side, from technology, we just think Bitcoin's the most incredible thing. It solves all these computer science problems. It's just beyond anything we could have done, because when I found it, I thought I would just make a copy, and then I'd have 2 Bitcoins. I'd be like, this is sweet. I do that every other computer thing they give me. I just make a copy of it.
Right.
But yeah, no, the Bitcoin, they figured out a way to stop people from double spending it, even around the whole world. Such a big problem. Such a great solution, and it was great to hear you talk about the hyperwave and the different aspects. I'm still afraid to go below $1,000, but we'll have to see how it goes. I'll try to hold on to my little piece of Bitcoins there, try to hold that on. But 10 million on the other side sounds great.
Yeah, it sure does.
We'll just have to make sure that. So thank you so much, Tyler, for being on the show.
I appreciate
it.